All right, let's check out the Chapter 5 homework. This is number 1. We're going to be looking at adjusting entries. We have got 3 of them to deal with. Let's start with the first one. It says June 1st, they paid $16,800 in rent for a 7-month period. $16,800 was debited to prepaid rent. So in this case, again, notice it's for a 7-month time period. This is, again, on June 1st. And again, the adjustment is going to be for the end of June. They want right here, they want the end of June adjustment. So that's a 1-month adjustment. So what you do is you take that $16,800 and you simply divide it by 7. That would give you your $2,400 per month. That's essentially your expense per month. So you debit, notice you debit the rent expense, and then you're going to be crediting prepaid rent for that $2,400. Again, that would be the first one. Second one, June 1st, they bought some supplies for $12,580. They debited supplies. Inventory at the end of the month showed $9,275 are on hand. That's basically, let me just kind of give you the T account picture on this one. They're essentially saying that you have supplies in your ledger showing $12,580, and they're saying that that should actually be $9,275. So our adjusting entry is going to be for what they used, and what they use, you just have to take the difference between these two, and the difference would be $3,305. Notice down over here, they're going to be debiting supplies expense for $3,305, and then crediting supplies for $3,305 for what you used. So that's the second one. Third one looks like they bought some equipment, 9-year useful life, no salvage value, straight line method. So on this case, what you would do is you have, remember your formula, cost minus salvage value, divide that by your estimated life. Now in this one, however you want to do it, oftentimes when I'm in class, I'll have my students divide by the number of months. So if you've got, what they say, 9 years, that's 108 months. So notice the cost, which is what, 108 minus 0. If you divide that by 108 months, that's going to give you right at $1,000 per month, which is what your depreciation is. So you debit your depreciation expense for that monthly expense, and then you're crediting this accumulated depreciation, which of course is what they call a contra account, which is, contra asset, which essentially reduces assets. And then one more thing, you may come across this. If you ever come across this thing called what they call book value. Book value is defined by cost less your accumulated depreciation. So our cost, which never changes, that's a historical cost. If we subtract out our accumulated depreciation after 1 month, you would say that the equipment has a book value right at $107,000. That would be what's on the balance sheet. So that you may come across that in your reading. So if you do, maybe this will help you understand that a little bit more. All right, so this was number 1. Let's check out the second one. All right, looks like we got some insurance and advertising, and these are going to be both prepaids. So we'll start with insurance. It's a 3-year policy, bought it for $24,000 on July 1st, and then they debited the prepaid insurance. So again, our calculation there, because this is going to be, you always have to look at the time period. They want the end of month, so 1-month adjustment. So very simply, all you got to do is, I'll just write this off to the side. You take that $27,000, and it is a 3-year policy, so simply divide that by 36 months, and that'll give you equals $750 per month. Notice they debit the expense account, credit the prepaid insurance for $750. The advertising was on December 1st, and it was a 2-year period, $72,000. So on that one, they would have taken $72,000, divided that by 24 months, and they would have gotten $3,000. And you can see the appropriate debit the expense and credit the prepaid. And of course, down below, you can see they're simply showing you the same calculations I just did. All right, that's number 2. Let's check out number 3. Now, number 3, they introduced the concept of this thing called a worksheet. Just think of the worksheet as a way to facilitate the way you're going to organize your numbers. Notice there's a trial balance column here. You've got an adjustment column for your debit and credit on your adjusting entries, and then they update the trial balance. So any account that you adjust, whether it's a debit or credit, you're going to update that in these two columns, and you'll notice you should still be equal. So like, for example, when we have a supplies adjustment, a 5,700, they would take that 9,000, subtract out the 5,700. That's how they come up with the 3,300. All right, so study this, and then again, make sure if you have any questions, let me know. So over here, they give us three, it looks like it's three individual adjustments where you got supplies, insurance, depreciation. On this one, they've already given you the adjustment amounts. They just want you to plug it into these columns. So this 5,700 would go to a credit of supplies, and then notice there's your supplies expense debit. Insurance 2,050, so prepaid insurance is credited, insurance expense is debited, and then here's your depreciation of 1,850. There's your debit there, and then here's your contra account accumulated depreciation right there. And I believe that's all they want on this one. So this is the first time I've had you kind of do a worksheet. So study it. There'll be a couple more problems later on where they want you just to enter the amounts in a worksheet. All right, that's number 3. Let's check out number 4. And the question says, it's a theoretical question. Assume they have net income of 135 before they made their adjustments. And these are your adjustments of 10.5, 12.3, and 5,400. Let's assume that the required adjusting entries have not been made. What effect do these errors have on the income? Of course, the income is going to be overstated because these 3 expenses would reduce your net income if you did not record those. So if you add up the rent expense 10.5 and the depreciation of 12.3 and the supplies of 5,400, that's going to give you the 28,200. And then down below, I'll just show you this is what the income actually should look like. It should have been 106,800. All righty. That is number 4. Let's check out number 5. And again, we got 3 more adjustments. We've got supplies used of 11,000. This one's pretty simple because they give you the answer. You just have to record it. So they debited supplies expense, credited supplies for 11,000. Same thing in the next one. When it says expired, that means used. They didn't make you calculate it in this one. So the 8,200 is your adjustment. Notice they're just debiting your insurance expense, credited prepaid for 8,200. And last one, they give you the depreciation already. You just have to record it. So this is your journal entry. And then let's check out your ledger. You should post these all to your ledger. Notice this is what your supplies updated balance should look like. Prepaid should be 41,000. Depreciation expense. Here's your accumulated depreciation, 5,800 credit. Insurance expense and supply. So again, in this problem, they're trying to tie in the ledger aspect of it. Just remember, anything that gets recorded in the journal should be posted into the ledger. Ledger is your summary. All right, this is number 5. Let's check out number 6. Again, more of this worksheet on this one. Let me move this over so you can see it better. And so on this one, they've given you the trial balance. We've got the first month of operations. They give you the adjustments. You're going to have supplies adjustment, insurance, depreciation, so 3 different adjustments. And they want you to plug these in to your worksheet. So as I kind of page down here, on the supplies, I believe that's the only one you got to do a calculation on. So on supplies, it says 4,200 bucks is how much is left. So if 39,400 is the initial supplies balance, the difference is what you use, which is 35,200. So when you come down here and you see this 35,200, where did they get that? That's just by taking the 39,400 and subtracting the 4,200. The difference is what you used. And so the adjustment is 35,200. But as you can see, the other 2, they've already given you, and you just have to plug it in. Plug in these other 2 for your insurance and depreciation expense. Plug these into your adjustment column, and then update these accounts by adding the appropriate debit or credit. Just kind of carry them over. So then you have your adjusted trial balance column, and then they want you to do an income statement and a balance sheet. Well, just remember for income statement, you just want revenue and expense items. And then of course the balance sheet is going to be your assets. So notice you can see how they just kind of carried over your fees income. And then of course, here's all your expenses. Looks like net income is 35.5. And of course, here's your balance sheet. and you'll notice that here's all your debits. They're just simply copying these columns, the exact same amounts, or copying them over. Let me move this over so you can see it a little bit better. There you go. And then you can see how the plug number down below, this 35,005, the reason they're putting that over here is because eventually this number right here would actually update that capital balance. So this is how they're able to get these debits to equal the credits. All right, so that's your completed worksheet. And then of course, you just have to do a quick question on how your insurance adjustment affects the prepaid insurance account. All right, that's number 6. Let's check out number 7. On number 7, they've already done everything for you. They just want you to go ahead and do an income statement, equity statement, and a balance sheet. And this is kind of review. So they've already got the income statement right here. So we know your net income should be 82.8. But what you're going to have to do is on your equity, you're going to have to update this capital account of 109 is going to have to be updated with net income. And then, of course, with this drawing of 8,200. So let me show you the income first. Here's your income statement. And again, you're just pulling these numbers from up above. There's your 82,800. Here's your equity. Like I said before, you have to update that 109. So you got net income, subtract out drawing. And so your updated capital is 183.6. This is the balance that goes on the balance sheet. So let's show you the balance sheet. Let me turn that off. And again, you're just pulling these numbers right from the worksheet, except that this capital account, that's the number you just would have updated from the equity statement. But notice that you should still be balanced on your balance sheet. And then let's see, one more. Let's see, on the last requirement, they just have a question about analyzing and so forth. So there's problem number 7. All right, last one. And again, and by the way, I tend to not ask questions about the worksheet on exam purposes or quizzes, but I still want you to know at least how it functions in terms of how they're able to organize the data. Think of it as kind of like a tool to help you organize the data. So on this one, they give you, looks like it's 4 more types of adjustments. You want to plug those into the worksheet, and then they want you to do the financial statements, and then they want you to also journalize these 4 entries and post those as well. So there's a part where they want you to actually record those in a journal format as well. So again, let me kind of page down. I'll show you these. I'll just kind of go through the adjustments. Here's your supplies. Notice they would have used 16,300. That's the difference between what they started with and what they ended with. They've got, here's your advertising, your prepaid rent, and then your depreciation. Those 3, I believe, let me go back up. They've essentially, no, for the advertising, let me go over the calculation to make sure you got that. Your prepaid advertising was 4-month period, and it was 24,008. So for that one, what they would have done, let me get that off. So what they would have done is they would have taken, let me get my stylus on. They would have taken that 24.8 and simply divided by 4. And that's how they would have got the advertising. On your depreciation, let me recap that one. On your depreciation, it looks like it is a 10-year useful life with no salvage value. So all I do there is I go to your equipment account of 67.2. I believe that's the one they want. Yeah, so just take the 67.2 and divide by 120. So, and then down below, let me just write this out. Get my stylus back on, switching it back on my computer. So the 67,200, 0 salvage, 10-year life, so that's 120 months. So that should give you your depreciation expense adjustment. All right. So again, once you record those in your adjustment column, you got these 4 adjustments. And then, of course, update your trial balance. And then let me move this over. And then at the end, you can see here's your income statement data and your balance sheet data. And then of course, here's your actual income statement, 95,740. Here's your equity statement where they update equity. And then finally, here's your balance sheet where they balance it out. And then to kind of go back, they also wanted you to record, here's your journal entry for your adjusting entries that you've already would have done these. This is what your journal would look like. And then here's your posting to your ledgers, updating your ledgers. And then they have an analyzing question. All right. So by the time you get to this problem, a lot of this should already be reviewed, but this is a good practice problem. If you have any questions about it or get stuck with it, give me an email. I'll be glad to give you some assistance. All right.